Hey guys, it's Alec from Titanflow. Today we're gonna start diving into the basics of supply and demand, right? Which is a very common trading strategy that you can really apply to swing trading, day trading, scalping. It's really a broad theory that encompasses pretty much any trading style. So when we're looking at the theory, what it really states is that stocks trade between supply and demand, and that is due to big money using technical areas of strength and weakness, right? So you look at supply, that's your area of weakness, and demand is your area of strength. For a stock to confirm a trend, it must clear the next level of supply or demand, right? And we'll look at that a little deeper as we start to set up our charts. So using technical indicators, we're going to be able to find points of strength and weakness, and really we're going to be able to trade the way that big smart money trades in order to profit. So really, if we dive in, it's really important to understand the fundamentals of supply and demand. You really need to have a basic grasp on the concept in order to trade it, right? Because if you just try to blindly follow the strategy without fundamentally understanding it, um, the best way to explain it would be if you just tried to memorize the material that you knew was going to be on the test versus actually understanding the concept, right? If you understand the concept, you can answer any problem and really have much more confidence in understanding the material as opposed to just trying to memorize. So when we're looking at supply, what we're talking about is areas where, really they're technical areas using moving averages and Bollinger Bands on our charts where there's a lot of value in selling, right? So these supply areas are areas where there is an influx of sellers and not enough demand from the buyers to keep progressing the price. So as this So the supply of people selling basically overwhelms the demand of buyers at this price point, right? So the best way to think of it is, let's say that a stock is up $10 on the day and it starts to come up on its supply, right? Well, now, the technical sellers will start to say, okay, this is kind of overextended, and you're going to have much more people trying to sell than people willing to step up and buy it at 335, right? So yeah, let's use the example of, let's say Facebook at 335, right? So Facebook started the day at 325, had a very nice bullish run. Maybe it got upgraded or there was just some really good bullish news on Facebook. But now they're up $10 on the day, and people are saying, okay, you know, we were really excited to buy this thing at 325, but now at 335, this is kind of an area where we want to get out of the trade, or it might be an area where short sellers want to step in, right? So the point being that this is a specific spot on the chart where sellers are going to overwhelm the buyers. And then we look at the at demand, it's basically the exact inverse, right? So a demand area is going to be a technical area on our chart where there's a lot of value in buying. Think of this as buying the dip, right? So this is an area where the technical buyers are most likely to step in and take back control from the sellers. The demand of buyers overwhelms the amount of supply sellers the amount of supply sellers attempt to distribute at this price point. So, a good way of thinking of this would be maybe there was some bearish news, or I think a better way to explain this would be just a normal healthy pullback on something, right? Um, maybe a stock has gone on a really big run and it needs to pull back a little before making higher highs, right? So, the sellers will be in control and maybe they drive the price down 5, 10, $15 on the day. But then once we hit that area of demand, the technical buyers are going to step in and they're basically going to say, wow, this is the spot to buy. We've let the sellers take control, but this is where we're going to step in and buy because we feel like we're basically buying the dip, right? But the problem with the statement buying the dip is it doesn't really have any justification behind it, right? It kind of, when you hear that term, it kind of sounds like you're just blindly buying something because it's down a lot, when really it might keep going lower. What you want to do is you want to identify a specific point where it seems logical to step in, right? And we're going to be able to do that with our supply and demand setup. All right. So really, we have a pretty good understanding of what supply and demand is. Now we need to be able to apply it to our charts, right? So what we're going to be using, we have listed here, we're going to be using the 5, 10, 20, 50, 100, and 200-day moving averages. And then we're going to also be using the exponential moving averages, the EMAs. We're going to be using the 20, 50, 100, and 200. And then to round it out, we're going to be using Bollinger Bands, which is really just two standard deviations above and below the 20-day moving average. Okay. Now, for any of you who use Thinkorswim, perfect. You're going to be able to put all of these indicators in for free. I personally prefer to use TradingView. Now, the downside to using TradingView traditionally would be that you have to pay for indicators. So you can only use 3 indicators for free before you have to start subscribing to a monthly cost or paying an annual cost. But there is a pretty tricky, I wouldn't say tricky, I would say it's smooth. There's a smooth way around this. All right. So I'm going to show you guys how to put in, what is it, 1 2 3 4 5 6 7 8 9 10. You're going to be able to put in all 11 of these indicators by only using 3 indicators, which is how many you're given for free. All right, so if we go over, here's what I'm going to do for you guys. Let's go ahead and let's start a new chart layout. All right, because this is what it should look like for you guys when you first download it. Okay. Now some of the basics of TradingView, just some of my personal preferences to make it look nicer. You guys see the candle wicks here, how the red candles have red wicks and the green candles have green wicks. I'm not a big fan of that. I like it all to be the same color so that it kind of pops out more, in my opinion. So you're going to click this little setting gear up at the top. And I believe if you go to symbol, go to wick, and I'm going to change them all white. Okay. So now, regardless of the candle, you have white wicks. That's just a personal preference of mine. Up to you. That's how I like to set my chart up. And then I'm going to go to appearance. And I personally like to get rid of these vertical lines in the background and just turn my background black. Okay. And this is what you're going to be left. And this is why I like the white wicks on the black background. It makes the wicks pop out a little more. And just an overall cleaner look, in my opinion. Okay, I believe that's it. I think the only thing we need to do is scale lines. We're going to want to make those white. Okay, those are those right there. Go ahead and turn the opacity up to 100, just so there's that. Now you have those clear white lines right there that separate the chart from the X and Y axis. And then I think that should be it. I think we're good. All right, so those are just a couple quick things to get your setup to look like this, just how I prefer it. And then let's go ahead and start adding these indicators. All right, so what do we have? We need to add 6 moving averages, right? So what you're going to type in is, I believe it's 6MA forecast. That's going to give you this kind of weird setup, but we're going to be able to clean this up real quick. So what you're going to do is you're going to hit the setting gear over here, right? And if that was too fast for you guys, you have this indicator bar at the top here. You're going to click on that, and you're just going to type in 6MA, and then you're going to click this first one that says 6MA forecast. Okay. Now we're going to go ahead and click the little gear right here. So you have this arrow here. You click that down, and there's your indicator. You're going to click that gear. And what you're going to want to do is just start to click off all of these ones that say forecast. So this is an indicator that someone created themselves, which is really nice because now instead of having to use up 6 indicators, we only have to use 1, which is really nice. But they added all these other weird things that we don't really need to worry about, right? We're not trying to overcomplicate anything. So what you're going to do is you're going to go over to your inputs and remember those indicators we listed. So you're going to follow them in order. You're going to type in 5 for your first one. Then we're going to go 10, 20, 20, 50, 100, and then the last one is already set up 200. Okay, now style. Now, this is how I personally have always set my indicators in terms of color. It's really up to you, but since you guys will be looking at some of my content, it might help for you to use the same indicator colors that I use. So what I like to do, and keep in mind this is going to say 730, just follow the same order, right? So 7 is 5, 30 is 10. So we're going to go to this first one. You're going to click right here. And I like to use a gold color for my 5-day moving average, and then turn that up to 100 and click that. So that's how thick the moving average appears in the chart. So I like to do the second one for that one. Now your second one, your 10-day moving average, I like to make it silver, turn that up to 100, and then 2. Now, because we're going to be using moving averages and exponential moving averages that are the same length, I like to make them the same color, but light and dark. So for my moving averages, I like to make them lighter. So this is our 20 now. I like to make my 20-day moving averages green. So I'm going to use this lime green for the moving average. And then for the EMA, I'm going to make it dark, which we'll get to that in a second. Okay, so now we're going to do our 50 moving average. We're going to make it a light purple. Turn that up to 100 and leave the thickness at 3. So going forward, I keep the thicknesses at 3 so they pop a little more. Okay, now for our 100, I like to do a lighter red. Leave that at 3. And then 200 is going to be a light orange. And then pull that all the way up. All right, so now we have 6 moving averages using only one indicator, so we don't have to pay for subscription, which is really nice. Okay, now we're going to type in, I think, EMA times 4. Let me see if this is the right one. I think that should be right. Just looks like there's some you got to be careful sometimes because these people create their own indicators, so there'll be some weird little things they might add to it. So you just got to make sure that they're just basic, just basic EMAs, which it looks like there's some extra stuff added here. So we'll just go ahead and cross those 3 off and then make sure that's right. Okay, so we're going to do 20, 50, 100, and 200. 20, 50, 100, 200. Okay, and then so for our 20, we're going to do a dark green. Since our MA, we did a light green. Now we're going to do a dark green. Our 50 is going to be this darker purple here. Put that on 3. Our 100, we're going to do a dark red. Put that on 3. And then our 200-day, we're going to do a dark orange. Okay. And that should be good. Let me just verify that those are the right coordinates. So you have those coordinates here. If you want to, let me see. If we go to scale, indicator name label. So that'll be a little messed up. But you guys have the colors. So you should be able to memorize the colors pretty quick. So that'll be all right. Let me just go to my personal. I'm going to go to my personal account that I pay for that has all of them. Just because pretty silly of me, I subscribed before I realized that you could do this, that you could kind of, there was a way around having to pay for it. So I just want to make sure that these match up and that these people didn't put in some weird stuff. So let's go to SQ. Got to look at the same stock. 202.28, 201.65, 202.28, 201.65. All right, so those, perfect. All right, now the last indicator that we're going to add that you're going to be able to add for free, Bollinger Band. you're just going to click on the basic one. This is just basic built in. It was created by TradingView, so there's no extra weird stuff. We're going to click on settings. And you can get rid of the basis because all the basis is a 20-day moving average. You don't need it. And then I like to make these kind of pinkish just to distinct them from any of the moving averages. Put those at the second. And then, yeah, kind of that cloudy. Just want to double check how I set mine up. I think I did white, 12% opacity. Okay, so you're going to go ahead and click this, go to white, and then put the opacity at 12, just so you can kind of distinct. All right, and that should be it. You know what I'm going to do real quick? That's the lighter purple. That kind of looks like pink, so I'm just going to go ahead and change that one real quick. So 5, 10, 20, 50. Okay, I'm going to turn that to this. It's a little more purple. It just looked a little too pink. And there we go. So this is our supply and demand setup, right? All good. Now I want to keep these videos relatively short so that I'm not just sitting here talking for hours. I want to kind of make this a series. Just real quick, just by looking at this chart, it may seem overwhelming, but you can already kind of see, right, that if we're looking at Square, how this 100-day moving average, remember we talked about demand, people are buying the dip, right? What happens when we come up on this 100-day moving average historically? We get close to it and we make higher highs. The buyers step in on this dip. The buyers step in on this dip. The buyers step in on this dip right here. And here we are again, right? So we might come down to this 200, but there might be a decent chance that we bounce here. So, without overwhelming you guys and just throwing too much at you, I just wanted to kind of show you how the chart kind of reflects the theory. All right, so let's go back. So there you go, free trading view setup. So that's going to do it for this first video in this series. So in the next video, what we're going to do is we're going to start to look at some examples of how to use this chart setup to discover trade opportunities, right? So we're going to take this theory that we've learned with our new chart setup, and we're going to start to learn how are we able to profit off this. And then just a reminder, guys, that every Sunday and Wednesday night at 9 p.m. Eastern time, we're going to be doing market roundups in the Discord voice channel. Just going to be a quick 15 to 20 minute recap of what happened on the day. Wednesdays, we're going to recap the first half of the week and then forecast the second half of the week. And Sundays is kind of going to be what are we looking at going into Monday? What are the big headlines for the week? So it's just going to be, we decided to split it up evenly so that every, 3 to 4 days we're jumping in and kind of recapping how's the market looking. All right. So I will see you guys shooting for 2 or 3 days from now, right? So every 2 to 4 days, we're going to be putting out an educational video here. All right. Of course, as always, any questions, you can go ahead and reach out to me on Twitter, Discord, Instagram, or just go ahead and drop a comment on this video here. All right. Take care, guys.